Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm starting the problems on capital and revenue expenditure. Last video I have completed the theory of capital and revenue expenditure. So if you have watched the theory video, definitely you don't find any difficulty in these short questions. Otherwise, these questions will be difficult for you. It will be completely new for you. So my suggestion, if you want the complete command on this topic, if you want good knowledge, first you should watch the theory video, then you should come to the problem. So before starting the problem, short questions and MCQs, I expect my viewers to have a printout of the problems which I have given in the link under my description. So go to the description, last line you will find the link, click that link, download that material which I have given, the questions which I have given, and keep this ready before watching the video. Otherwise, simply if you listen, if you watch the video without having the problem, there is no use at all. Hope you understand my point. Now take a screenshot of the solution of first 20 short questions, then I'll explain each and every point. Come on. Now I'm going to start the first short question on this capital and revenue expenditure. First one, which statements about capital expenditure are correct? The 4 statements are given. Out of these 4, which are the statements which are correct? The first statement, it is money spent on day-to-day business operations. Absolutely not. Capital expenditure is not the expenditure on day-to-day running expenditure. First statement wrong. Second, it is money spent on purchasing non-current assets. Right, absolutely right. Capital expenditure is the money spent on purchasing non-current asset. Second one is right. Third one, it is recorded in the statement of financial position. Yes, the capital expenditure will be recorded in the statement of financial position. The second one and the third one, both are correct. Both statements are right. Last one, it includes expenses relating to non-current assets. No. Expenses relating to non-current assets are not called capital expenditure. Example, repairs incurred on motor vehicle. Shall we add the repairs to motor vehicle? No. So this is a revenue expenditure. So out of 4 points, 2 points are correct. 2 statements are correct. Second and third. So you can see the answer here. C is the answer. C is the answer. Second and third statement are right. Which statement of capital expenditure is correct? It is money spent on non-current asset. It is recorded in the statement of financial position. First question completed. Now second, what is the effect of treating an capital expenditure, an item of capital expenditure, as a revenue expenditure? Accountant has committed a mistake. A capital expenditure is treated as a revenue expenditure. In theory video I have explained this impact. Suppose expenditure incurred on purchasing furniture. Purchasing furniture is a capital expenditure, but by mistake that purchase of furniture is taken as a revenue expenditure. Then what will happen? The profit will come down. So what is the impact here? 4 statements are given. Which statements are right? First, cost of non-current asset is overstated. No. The first one is not correct. It is saying cost of non-current asset is overstated. No, because capital expenditure is treated as revenue expenditure. It is understated. Then cost of non-current asset is understated. Right. Because purchased furniture, but furniture is not taken in the statement of financial position. The purchase of furniture was taken in the income statement. So here second bit is correct. Third, depreciation for the year is overstated. No, because we have not treated as an asset, so there is no question of depreciation. Then depreciation for the year is understated. Yes, because one asset is there on which we have not provided depreciation. So depreciation will be understated. So out of the 4 bits, 2 bits are right. That is second and fourth. So here answer is D. D answer is right, 2 and 4. What is the effect of treating an item of capital expenditure as revenue expenditure? The cost of non-current asset is understated because We have purchased a capital expenditure, we have incurred capital expenditure, but not taken in non-current assets. That's why understated. And secondly, depreciation for the year is understated because we have not provided the capital expenditure. So there is no depreciation. Understated. The answer is 2 and 4. Next, third one. State the meaning of the term revenue expenditure. Already in theory video I have explained you. Revenue expenditure is the expenditure incurred on day-to-day running of the business. So here money spent on day-to-day running of the business. That is called revenue expenditure. Next one, give one example of capital receipt. In theory video I have explained you what is capital receipt, what are the examples. It is asking you one example. Give one example of capital receipt, but I will provide 3 examples so that you can remember. The capital receipts are capital introduced. When the owner introduced capital, it's a capital receipt. Because every day he will not bring capital. It's a non-recurring item. The capital introduced by the owner is a capital receipt. Secondly, a receipt of loan. A loan is taken from bank or financial institution. That's a non-recurring. Third, proceeds of sale of non-current asset. If a non-current asset is sold and cash is realized. Example, old furniture was there. The business wants to replace the old furniture with a new furniture. So old furniture was sold away and cash is realized. That is a capital receipt because every now and then we will not sell the furniture. So sale of non-current asset is a capital receipt. So 4 problems completed. Fifth one. Pedro spent $8,410 buying a new vehicle. This Pedro is a sole trader. He has purchased a new vehicle by spending $8,410. The invoice showed vehicle cost is $8,000, number plate is $50, insurance for 24 months is $360. How much is the capital expenditure? So when he purchased the vehicle, he has incurred 3 expenditure. Vehicle cost, number plate and insurance. You must remember, vehicle cost is a capital expenditure. Number plate is a capital expenditure because only once we fix the number plate. Number plate will not be changed every year. So number plate is a capital expenditure. But insurance, whether it is taken for 1 year or 2 years, doesn't matter. Insurance is a revenue expenditure. So out of 3, only 2 are capital expenditure. Vehicle cost 8,000 and number plate 50. So total is 8,050. Answer is A. Answer is A, 8,050. Vehicle cost 8,000, number plate 50, 8,050. Insurance is a revenue expenditure. It should not be taken. Next, 6th one. Samuel buys a new computer and pays the following amounts. So computer system 8,000, ink cartridges 350, 5-year maintenance contract 1,200, delivery cost 70. How much is the capital expenditure? Again, out of 4 items, you have to decide which items are capital and which are revenue. Only capital expenditure we should take. First of all, computer system. The cost of computer system is a capital expenditure. Then ink cartridges. These ink cartridges are the revenue expenditure. Every now and then ink cartridges have to be changed. So it is not a capital expenditure, revenue. Whereas 5-year maintenance contract, the maintenance expenditure, whether it is 2-year or 5-year, doesn't matter. It's a revenue expenditure. Lastly, delivery cost. Delivery cost will be incurred only once. When we purchase an asset, at that time only delivery cost will be incurred. So out of 4 items, only 2 items are capital expenditure. That is computer system cost and delivery cost. These 2 are capital. The answer is A, 8,070. A is the answer. 8,070. In this computer system, 8,000, delivery cost 70. Remaining ink cartridges and maintenance are revenue expenditure. That's it. 6 questions I have explained you. Now I am coming to the 7th question. Give an example of revenue receipt. Revenue receipt is a recurring receipt. Revenue receipt is a recurring. So example of revenue receipts are sale of goods, because every now and then, every day, goods will be sold. So receipts from sale is a revenue receipt. commission received, rent received, interest received, all these are recurring. So it is asking you an example, only one example, but I am giving here 3 examples, 4 examples. Sale of goods, commission received, rent received, interest received, all these are revenue receipts. Next one, which statement describe capital expenditure? Again, 3 statements are given. Out of 3, which statement will describe capital expenditure? First, it is for an item which lasts for more than a year. Yes, capital expenditure incurred, it will give the benefit for more than 1 year. First statement right. It is recorded in the income statement. Wrong. The capital expenditure will be recorded in statement of financial position, not in income statement. So second statement is wrong. Third one, it is recorded in the statement of financial position. Right. So out of 3 statements given, second statement is incorrect. First and third are correct. The answer is B. Answer is B, 1 and 3. It is for an item which lasts for more than 1 year. It is recorded in the statement of financial position. Next, 9th. Ahmed bought a motor vehicle and paid the following amounts. Again, 3 amounts are given. Motor vehicle 8,000, number plate 100, insurance 400. What was Ahmed's capital expenditure? 3 expenditure are given. Out of 3, 2 are capital and 1 is revenue. What are the 2? Motor vehicle cost 8,000 is capital expenditure. Number plate $100 is the capital. Total 8,100 is the capital expenditure. Insurance is a revenue expenditure. We should not include. That's it. So 9 problems completed. Now 10th one. Mike buys a new van for $15,000 for his fish delivery business. A new van is purchased. That means it's a capital expenditure, 15,000. He fits the van with a refrigerator unit costing $1,000. Because he's in fishing business, he wants a refrigerator in his van. So the fixing of refrigerator is also a capital expenditure because it will give benefit for a long period of time. Similarly, he puts his logo on the side of the van, which costs to $250. To make the advertisement, publicity, he has put the logo of his business on the side of the van. Expenditure incurred $250. That is also a capital expenditure. What is the capital expenditure of the van? All the 3 are capital. Vehicle cost, refrigerator unit and logo. All the 3 are capital. The cost of the van 15,000, refrigerator unit fitted to the van 1,000, charges of logo on van $250. So total expenditure $16,250 is the capital expenditure. Next, 11th. Where the capital expenditure and revenue expenditure should be recorded. All these points I have explained in the theory. The capital expenditure will be recorded in statement of financial position. The revenue expenditure will be recorded in the income statement. Same thing. Capital expenditure recorded in statement of financial position. The revenue expenditure is recorded in income statement. Next one. What is the effect of treating capital expenditure as revenue expenditure? If you treat a capital expenditure as revenue expenditure, the profit will come down. Example, purchase furniture. Purchase furniture is a capital expenditure, but the accountant wrongly has taken in the income statement. Purchase of furniture is taken in income statement. The profit will be understated. Profit will be understated. And non-current asset will also be understated. Because we have purchased one non-current asset, it is not taken. So here profit is understated, their non-current asset is understated. So the figures in both the statement of financial position and the income statement will be incorrect. That is the effect of treating capital expenditure as revenues. Now what is the effect if a bookkeeper posts the purchase of photocopier to a stationery account? Photocopier purchased is a capital expenditure, but by mistake the accountant has taken it to stationery account. Stationery account is a revenue expenditure. Simply a capital expenditure is treated as a revenue expenditure. Profit will come down. The first effect is profit will come down. Second effect, the non-current assets will also decrease because we have not taken the photocopier in the non-current asset. So profit for the year will be understated, first effect. Second, the statement of financial position will not include the value of an asset. Photocopier is purchased, but it is not taken in the statement of financial position. The non-current assets will be decreased. That is the effect. Next one, a bookkeeper posts stationery to office equipment instead of stationery account. What is the effect of this error? Stationery purchased. Stationery is a revenue expenditure, but by mistake he has charged this stationery to office equipment. Office equipment is a capital expenditure asset. So treated a revenue expenditure as capital expenditure. Then what is the effect? We have not taken stationery. So our profit will be overstated in the income statement. So first effect, income statement will show more profit, overstated profit. Because one expenditure is incurred but not taken. Second effect is, it is wrongly taken to office equipment. The office equipment value will increase. Non-current asset will increase. That is the effect. So here profit is increased. There non-current is increased. Profit will be overstated. The statement of financial position value will be overvalued. Both effect. Stationery not taken in income statement. That's why profit will be more. By mistake, that stationery was charged to office equipment. The office equipment value has increased. That is the effect. Next one, 15th. What is capital expenditure? The capital expenditure is the expenditure incurred on acquiring non-current asset. That's it. Capital expenditure incurred on buying non-current asset or adding value to the non-current asset. Second, next one, 16th. What is revenue expenditure? Revenue expenditure are the recurring expenditure or day-to-day expenses. The day-to-day expenses or running expenses of the business are called revenue expenditure. Example, repairs of the vehicle, salary paid, rent paid, stationery paid. These are the revenue expenditure. Next comes, what will happen if capital receipt is included in revenue statement? Capital receipt. Actually, capital receipt should be taken in statement of financial position. But capital receipt, by mistake, it is taken in revenue statement. That means income statement. Capital receipt, by mistake, taken in income statement. So profit will be overstated. Profit will be overstated in the income statement. And financial statement of financial position will not show the true figure. Because one capital asset is not recorded. Actually, capital receipt should be recorded in statement of financial position. There it is not recorded. Income statement it is recorded. So income will show more, profit will show more, and the statement of financial position will not be true. So the profit for the year will be overstated. Example, if bank loan taken is recorded in income statement. Next, 18th. What will happen if no distinction is made between capital and revenue expenditure? If no distinction is made between capital and expenditure, capital and revenue expenditure, then profit will not be true. The income statement will not show the true profit, and the statement of financial position will not show the correct financial position of the business, the correct assets and liabilities. So this will affect the overall profitability and financial position of the business if no distinction is made between capital and revenue expenditure. Next, 19th. The following is the list of a builder's expenditure for the year. What is the amount of capital expenditure? So many items are given. Motor vehicle, it's a capital expenditure. Purchases, not a capital expenditure, it's a revenue expenditure. Purchase of goods. Purchases means purchase of goods, it's a revenue expenditure. Wages is a revenue expenditure. Rent of offices, it's a revenue expenditure. Then machinery is a capital expenditure. Then petrol is a revenue expenditure. So out of so many 6 items, only 2 items are capital expenditure. That is motor vehicle and machinery. Remaining all are revenue expenditure. So you can show like this. Answer is B, 17,000. B answer $17,000. Capital expenditure, motor vehicle 10,000, machinery 7,000, 17,000. Purchases, wages, rent and petrol are revenue expenditure. Next one, 20th. Which of the following are capital expenditure? The 4 items are given, out of which we have to decide which are the capital expenditure. First one, cost of motor vehicle. Yes, it is a capital expenditure. Second, petrol of motor vehicle. No, petrol is a recurring expenditure. It's a revenue expenditure. Then shop fixture. Shop fixture is a capital expenditure. Shop fixture is a capital expenditure. Whereas wages of the shop assistant, this is a revenue expenditure. So out of 4, only 2 are capital expenditure. The cost of motor vehicle and the shop fixtures, that is 1 and 3. So A answer is right. 1 and 3. The cost of motor vehicle and shop fixtures. The petrol for motor vehicle and wages of shop assistant are revenue expenditure. So in this video, in the first video of short questions and MCQs, I have completed 20 bits. I have explained each and every point. So remember, students, if you want the complete, command on the subject of accounting, each video is very, very important. You must have the patience, you must have the urge to learn something, to acquire the knowledge, to get the command. You must have the patience. You must watch the video till the end. And every video is very, very important. Inshallah, we'll continue the next problem in the next video.